Hey everybody, welcome to our webinar this evening. Thank you guys all so much for joining us. We have over 100 people registered for tonight's webinar. So those of you who are on now, just know that anyone over 100 isn't going to be able to hear tonight. So good job being on time and getting yourselves logged in early. My name is Kristen Tabar. I am a real estate advisor here with Marshall Reddick. And tonight we're going to be talking about financing for real estate investors. This is absolutely the most important step for you if you are looking to purchase an investment property. And tonight we're going to hear from our preferred lender, Reed Hazard. We've been working with him for over 10 years here. We're comfortable sending our investors to him for their conventional financing. And to be honest with you, we're skeptical when our investors come to us and say they have their own lender. We don't know anything about the other lender. We don't know their customer service, and they don't know their capabilities. So we like to use our people, and we like to use our team, and we want you guys to get the best of the best when it comes to working with us. So with that, we send everyone to Reed over at AmeriFirst Financial. They'll get you pre-approved on the front end, and your process will be smooth from there on out. So we're going to spend about the first 20 minutes tonight hearing from Reed. He's going to talk about your conventional financing options. And as soon as he wraps up, we're going to have a little bonus presentation from Patrick Prunty, who's our controller here at Marshall Reddick. He's going to be talking about the private financing options for those of you who may not be able to qualify for conventional loans. We will spend some time at the end answering questions that anybody has, and throughout the presentation you can type those into your the space you have on your screen. And without further ado, let's jump in. I'd like to introduce everyone to Reed Hazard. Reed?
Thank you so much, Kristen. Happy 2016 to everybody. It was, I believe, the same date a year ago that we did the same seminar. We do it every year. A lot has happened over this past 12 months. A lot to do with interest rates, and I'm going to kind of go over a little bit about the markets tonight. Not a whole lot, but anybody that wants to follow up with me after the meeting and get added on my market update, I'll have some information tonight on my slides for how to do that as well. A little bit about myself. This is my 12th year being the preferred lender for Marshall Reddick. I specialize in purchase loans and refinance loans for investment property and primary residence for 1 to 4 units. So anything over 4 units is always considered commercial property financing, and I do not do those loans. I'm licensed to lend in California, Texas, Arizona, Indiana, and Tennessee, and we're about 2 weeks away right now from getting our Florida license. So very excited to start working with the investors through Marshall Reddick on Florida. I've worked with over 500 Marshall Reddick members over my lifetime working with Marshall Reddick. I love investors. Bought my first property when I was 19 years old. I own multiple rental properties now, so I do own property in some of these markets as well. So me being an investor, on top of being your financier, I can also kind of tell you my experience along the way. And I feel that that's something that Marshall Reddick offers that many other companies out there do not offer, is that our resource team, many of us own real estate as well. So always ask questions about our own experiences. Brett Gilliland is my senior loan officer that works for me in Marshall Reddick. He's fantastic. He's got great customer service. He's bought property here in California. He owns 2 properties, specializes in investment property financing as well. He sits in my office right next to me. So he and I work together as a team to service Marshall Reddick and their clients. Brett is licensed to lend as well in California, Texas, Arizona, Indiana, Tennessee, Washington, Idaho, and then he's also going to be getting his Florida license here in about 2 weeks. So he'll be helping out for those loans as well. Okay, interest rates. So as we can obviously see here on this graph, rates back in the early 80s touched 18.45% on a 30-year fixed mortgage. Okay, so now CDs were also paying, roughly the same rate at that time as well. You could literally park your money in Bank of America in a CD and make 18%. So everything is relative to its environment. Rates right now are obviously historically low. They've been teeter-tottering on the lower levels of the past 24 months average due to some recent turmoil in the stock market. I'm going to talk about that here in just a minute. But really quickly, I just want to illustrate you guys how important interest rates are when you're buying not only primary residence, because obviously the lower the rate, the lower the monthly payment, but when you're buying investment property, every 1% rise in interest rate is a 12% rise in your total monthly payment. So that's going to take away 12% of your cash flow. This is a simple graph illustrating 4.5% through 6.5%. I'm going to go over why these rates are so close to watch over the next 24 months, because this is probably where we're going to edge up to as the Fed adjusts their rates up over the next 2 years. So again, right now, you guys, you can still buy investment property at these levels where 4.5% is not going to have any points on it with 25% down. A little bit of a market update here. I mean, the Fed raised the federal fund rate finally, okay, after nearly a decade. Now, the federal fund rate is the overnight rate at which banks and institutions have money lent to them from the Federal Reserve, okay? So when Bank of America and Wells Fargo give you a loan, okay, they're not going to generally hold on to that loan. They're going to sell that loan. And they sell those loans to Fannie Mae and Freddie Mac if the loan amounts are below $625,500 here in California. In other states, anything below $417,000 is being sold to Fannie Mae or Freddie Mac. Fannie Mae and Freddie Mac are buying those loans with money printed from the Federal Reserve. When the rate, okay, that the Fed charges for that money goes up, like it just did, 0.25%, it raises rates across the board, okay, where any of you that have a home equity line can look at your rate and you will see that it went up exactly 0.25% on just after December 16th. Mine did. I have a TCF second home equity line on my primary residence. It went up 0.25%. My payment went up $89 a month. So that is going to continue to happen over the next few years. The Fed came out and said that they're going to do potentially 4 hikes this year. It's got the stock market not knowing what to do with itself because the Fed came out again even today. They kept rates unchanged. So again, we've only had 1 hike so far. But they still came out and said that they expect to have several hikes this year. They didn't date stamp when they're going to happen, and they're not, and they're still looking away from the fact that we have extremely low oil and there's a lot of inflationary issues that still haven't caught up yet. And realistically, we shouldn't be raising the rates any more than at least 1 time this year, maybe twice. But they haven't told the markets that yet. I believe that they will tell them that, but I don't think it's going to happen for another month or so, and we're probably going to stay in a little bit of a volatility swing for at least the first quarter of this year. Now, what does that mean for interest rates? My last little point here that I have on this slide. What has happened to rates since the first rate hike in December? You'd think that they would have gone up, right? This next graph, okay, clearly illustrates the bond market for the Fannie Mae 3.5% mortgage bond. This is the bond that is most closely tied to all investment property loans that have the lowest rates on the open market with the lowest down payment requirements. Fannie Mae loans that in California cap at $625,500 and out of state cap at $417,000. Now, red illustrates the bonds being sold off from investors. Therefore, the bond is depreciating and the rate goes up. Interest rates goes up. Green illustrates investors buying bonds. Therefore, the bond appreciates and it drives the yield down. Interest rates go down. I've highlighted the first bottom peak, okay, in yellow right here. This is the exact day of how low mortgage-backed securities got, okay, up until this past Fed decision. Rates got literally the worst that they've been over the past 12 months, moving up to that Fed decision. Since that point, them only agreeing to raise it 0.25% because of all the volatility that it's brought to the world markets, because the Fed is finally tightening. You can see here, look at all of the green. That's why interest rates right now on a primary residence are back into the high 3% range without paying costs for your loan. Okay, you can pay a point today and be back around a 3.5% for a primary residence. Investment property rates are the lowest that they've been over the past 24 months. Now, again, look at all that green, folks. It's not going to last forever, but I do agree with many of the people that I speak with, my most trusted advisors, that without a doubt, and Eric Lutz, the owner of my company, very, very smart man. This is probably going to last for another 3 months or so, and then the stock market will find its way back around mid-year. And at that point, if the Fed makes another rise in the federal fund rate, we will see rates start to rise. Primary residence rates will go up probably to the mid-4s, and investment property rates will probably go into the low 5s. So that's just my market update. Every single week, you guys, if you want to be added on this market update, you can send me an email to rhazard@amerifirst.us. All my information will be on a slide here at the end of my presentation. I'll simply add you on there, and every single week this will go out to you. It's dummied down, for the consumer, so it's great information to follow. And yeah, if you guys want to be added on there, just go ahead and email me. Getting pre-approved, you guys, is the most important part of the process, no matter what, and you need to do it right, through the right person with the right system. So why do you want to get pre-approved, okay, is to understand your true buying power, okay? Many potential buyers have incorrect expectations of their buying power. Either you don't think you can qualify for enough, or you think you can qualify for more than you actually can. Knowing your true buying power will save you and your agents time in the process of looking for a home. And honestly, you guys, you just really need to know, okay, if I'm going to buy a primary residence, what's the monthly payment going to be for a $300,000 place? And what am I paying now, right? How much can I really afford to pay in monthly payment? Because then someone like me can tell you, based off this loan amount, with this amount of money you have for your down payment, okay, this is how much your monthly payment's going to be. And then we can find what's comfortable for you to pay, and then that way we can target the right properties, and we're shopping in the right price range. So that's one of the most important reasons, okay? The other very, very important reason, you guys, is because of TRID. That's the TILA-RESPA Integrated Disclosure Rule. What that did, okay, just in plain English for everybody, is it added a 3-day right to rescind on your transaction, okay, at the end of the process before you can sign your final closing documents. Okay. Now, what that's done for a lot of banks is it's delayed them in their process by over a week, because you have to be, as the consumer, emailed what's called a CD. It's replaced the HUD-1 closing statement. They issue a CD that's sent to you, and you need to review it. You need at least 3 days to review it. It's called a closing disclosure, and it will list all of your cash to close, all of the closing costs, and this now gives you a chance to really be able to review the numbers before you sign your closing documents. In many cases, for some of you that have bought your own homes or bought investment property, I'm sure you can remember a time you were literally driving to the escrow office and just then getting your final HUD and being able to see what the actual numbers are going to be, okay, meaning like days of interest and whatnot, because a lot of times it can be very stressful in a real estate transaction, and it will take almost a full 30 days because there's many things that can happen. A poor home inspection, and then some repairs have to be done, or there could be an issue with the appraisal, or for whatever reason, transactions sometimes can become time sensitive in the end of the process. This has added 3 days additional onto that process. So what does it mean for you when you sign a 30-day escrow and when you give your earnest money to a seller? Okay, you need to close on time because you're signing a contract to. And sellers, many of you are sellers on the line, right? When you sign a contract, you want to close on time, okay? You want your money on time or even early. Many of you are already buying another property, and it's based off of selling that property, okay? So we take that very, very seriously here at AmeriFirst Financial, and these are some of the reasons why it's so important to get fully pre-approved up front now, okay? Also, biggest thing, sellers will not consider you a legitimate buyer if you have not taken the time to officially approved with a lender. Now, I'm just going to quickly go over what getting pre-approved is and then what it is not. The 5 required tasks in getting approved are you take a 1003 loan application, credit report is pulled and reviewed, okay? We run an AUS, which is an automated underwriting system, where we run it through Fannie Mae or Freddie Mac or whoever the investors that's going to buy that loan, right, depending on the loan size and the category. We then have supporting documents, so as W-2s, tax returns. If you're self-employed and if you're incorporated, we'll need business tax returns. Whatever is needed based off of your Fannie Mae approval, we will then request that from you. Once we have all of these documents, same day, my underwriter, Lee Tiska, that's in my office here in San Clemente, we have an in-house underwriter. She in-house underwrites the file, and we pop out a full credit approval. Now, the credit approval is a full loan approval, contingent only on clean and clear title and an acceptable appraisal. So when you go out and when you shop with the full loan approval up front, and you can provide your agent with proof of funds like bank statements, there's not a seller on earth that will look at that, and when you say you can definitely close with the new TRID laws within 21 days with an acceptable 10-day to 12-day ability to rescind based off of the appraisal, because we always want an appraisal contingency in there, okay? Trust me, sellers will look at it, not as good as all cash, but close to it. And that's how we've been able to tee up offers for our borrowers as good as all cash or as close to it, is by doing just the full approval up front. Also, some of you out there that, you know, make $500,000 a year, perfect assets, perfect credit, you know that you can get approved up front, I get it. But there's a lot of processes that you have to go through nowadays, and why not get it done ahead of time so that when you get into escrow, you can focus on what matters, which is moving out of your current home and getting your new bills established where you're going to move to, and not having to jump through so many hoops. So our clients that want to do the full approval up front, it's more documentation heavy and time heavy for about 24 to 48 hours, but I do promise you guys, the benefits are everything that I just talked about, and it is completely worth it. And the best thing also, we don't charge for this. So I hope that you use me if we go through this process, but if something happens and if you don't, or if you just don't end up buying, we don't charge for anything. We are a consultant, and we are not paid until the process is done and until the loan closes. Okay? Just to go over it quickly, this is just what most banks do. They just take an application because this is the lowest cost, right? You don't have to have man hours of an underwriter underwriting a loan. You don't have to have an AUS ran, which is an additional cost. They just take an application, they run your credit. Sometimes they'll run an AUS, and that's max. Maybe they'll have you send over the tax returns or the bank statements, okay? But it's not reviewed by an underwriter. Some of you may have had a short sale 5 or 6 years ago, or a foreclosure, or you have 7 or 8 investment properties. People like myself and my team, that's what we specialize in. Banks like Bank of America, they just want the jumbo loans for the person that's buying a primary residence, has 1 other investment property maybe, and it's got $500,000 in the bank. If you fit that category, you're still going to wait in line, but they do have great rates. And why I know this is because we sell our loans in the back-end market to Wells Fargo, Chase Bank. We used to sell to Bank of America, but they no longer offer correspondent, and we also sell to GMAC and U.S. Bank. We get wholesale rates from all of them that are a little bit better than retail, and again, I will tell you, the only way that you will get a better rate going to a retail bank is if you've got several $1 million under asset with them, which I got a little joke there, because if it's under asset with them right now, it's in the stock market, and the stock market's down 25 to 30% year to date. So again, you guys, not a whole lot of benefits ever going through a retail bank or through a broker. You want to go through a direct lender that's able to follow these processes, okay? This is not an approval. How are we approving you? So any of you on the call that have not bought property, okay, these are full documentation loans, meaning that we have to verify income, assets, and credit for the loan. Okay, there's no more stated income loan where you state your income. Everything has had to be verified since about 2009. Okay, so quick little example of debt to income ratio. If you make $10,000 a month in gross W-2 income, your monthly debts, including the monthly payment on your primary residence or the rent that you pay, and any other loans you have on credit like auto loans and minimum payments on credit cards, you would get all those monthly payments, you add them up, let's say that they're $4,000 for example, $4,000 divided into $10,000 is 40%. We don't want to see you above a max of 49.99% debt to income ratio, okay? Now, if you've got a lower credit score, you're going to be capped off at about a 43%, okay? And any of you that have poor credit, or when I run your credit, if I see that the scores are not that great, on page 8 of every credit report that we run is a credit analyzer offered by Cisco Credit. And it'll say on there, potential score improvement, Experian, 28 points, Equifax, 58 points. Whatever it says on there, we can have my assistant Jana run a credit analyzer. She will then send you over the details. It may be as simple as, hey, pay down your American Express to 25% of the available credit. You're using too much credit. After you do these things, we then run what's called a rapid rescore. And Cisco will rescore your credit with each one of the bureaus based off of your new balances. So if you've got a bunch of late payments, obviously we can't get your scores up by doing anything like that. But for many of you, it's all about the liabilities that you're carrying and what and how much of your limits that you're using on a monthly basis. So again, just another cool little thing to throw in there that we do, because credit scores, as you can see here from an investment property standpoint, definitely affect that income ratio. If you're buying a primary residence, okay, we can get you to a 50% debt to income ratio with a little bit lower credit score. But no matter what, even on a primary residence, for a Fannie Mae Freddie Mac loan, you can never go above 49.99%. For a jumbo loan, they want to see 43%. Investment property financing, like I said, 49.99 max, okay? Just really quick, debts that are not included in debt to income ratio, you guys. Auto or health insurance is not included. Cell phone and utilities, including cable, is not included. Loans to family and friends that are not recorded, okay? Business loans that are tied to an EIN number, not going to be included. Very quickly, just going to go through this. Things after we've gotten fully approved, right? Like we've got an approval letter. You guys have done a full credit approval, okay? Don't apply for or open new credit of any kind. Don't max out or overcharge on your current credit cards. Don't consolidate any of your credit card debt. Don't make any large purchases. Don't make large deposits into any of your accounts if it's like all cash. If it can be sourced, then that's okay. We'll have to source it. Like if you transferred money from your Merrill Lynch account right to your Schwab account, that can all be sourced. Maybe you sold off stock because you want to buy investment property. But people that go and put cash in the bank, right, and then want to use that cash, the problem is we go back 2 months, okay, always in banking, and we look for 2 months bank statements. And if any of the funds that you want to use for your down payment or to qualify for your reserve requirements, if any of those funds were just recently deposited in the past 2 months and we can see the large deposits, we have to know where they came from. And you can't use borrowed funds when you're buying investment property, okay? So they would have to be your own money. So either get the funds seasoned and wait till you have 2 clean bank statements so we don't know about it, or you have to have it coming from verified accounts. So again, we do the pre-approval. We just prefer after we've done that, we already have all of our funds accounted for that we're going to use. But if we don't, okay, any large deposits that are going to come in, again, just make sure that they're from verified accounts and that it's not borrowed funds, and then we're good. If you're buying a primary residence, gift funds are allowed. You can use up to 100% gift funds, okay, and we can talk about that more in a conversation after the call. Things to do, always do maintain employment at your current job, because again, if you were to leave jobs from a W-2 to another W-2 job, we'd only need 1 pay stub at the new job. But if you're on a 30-day escrow and if we're trying to close and then you have to start a new job, we have to wait for a new pay stub. Now we're dealing with a late escrow. We don't want to deal with that. So again, just keep your current job while you're in the searching process. I don't know if I noted or if I mentioned this earlier, but pre-approvals are good for 90 days. We're not going to keep on running your credit after the initial pull. So this is kind of what I'm talking about right now is what you don't want to do within that 90 days that you're looking for your home. Do keep all existing credit card accounts open. You don't need to close anything until we tell you or if we tell you. Do pay off collections, judgments, or tax liens reported within 1 year. Do stay current on all existing accounts and financial documents. If you're late more than 1 time in a 12-month period on a mortgage, you will not be able to get Fannie Mae or Freddie Mac financing for at least 24 months. So very, very important that you're always on time with everything, especially mortgage payments. down payment requirements. Your first through fourth finance property, okay, you got to have a minimum FICO score of a 640 to get investment property financing. One unit property is always only going to require 20% down. 2 to 4 units, so a duplex, triplex, or a fourplex is going to require 25% down. The best rate pricing is going to be a 740 mid FICO score and above. Okay, there's no better pricing above that unless you're talking about jumbo financing. Jumbo financing, which is anything above $625,500, jumbo financing would require a 780 to get the best pricing possible, not on investment property financing. So all of you out there that have 800 FICO scores, it's a fantastic score, but just know 740 and above is going to make you an A-plus buyer for investment loans. Borrowers with 5 to 10 finance properties. Now I'm going to skip the slide because something very cool just did come about. We now, for your 5th and 6th finance property through Freddie Mac with conventional interest rates, we can get you your 5th and 6th property with only a 700 to 720 FICO score. It sounds funny to any of you out there. I don't think that it's a very big deal, but I have quite a few buyers actually that have FICO scores just over 700 and have been waiting for this. So 700 FICO score is all we need to buy the 56 property. 7 through 10 are always going to require a 720 mid FICO score and above. Now, properties 5 through 10 are always going to require an additional 5% down. So 25% down for a 1-unit property, 30% down for a 2 to 4 unit property. The interest rates, you guys, are the exact same for both of these loan programs. The Fannie Mae loan program, Freddie Mac has the other loan program for 5 and 6 if you don't have that great of FICO scores, and the interest rates for that program are very, very close to the Fannie Mae programs, okay? A couple other little requirements for how you can get to 10 finance properties, okay? Must have 6 months of PITI in reserve for each property. That's principal, interest, taxes, and insurance for each property, okay? Rental income can be used to offset subject monthly payment at 75% of the projected monthly rent. So let me explain that very, very quickly here. If you look down here, you'll see, does subject rental income count towards my debt-to-income ratios? Yes, we can use 75% of the gross rental income to qualify. Okay, so how we figured that out is when we order your appraisal, we order a separate document called the Form 442. That's a rental comparable analysis of all properties renting that are comparable to yours within a 2 to 3 mile radius. Okay, the underwriter will then give you 75% of those rents and allow you to use that towards your principal, interest, taxes, and insurance payment on the new property. Folks, I have school teachers that make $6,000 a month, okay, and they have 10 properties. And it's because they save well and they budget correctly, they manage their properties vigorously, okay, and they keep on buying with this type of a ruling. I do not see this going away anywhere. Fannie Mae and Freddie Mac, if anything, are going to continue to loosen their conventional guidelines at this point as rates go up. Okay, one more thing that I do want to cover here is that the 5 to 10 finance properties is only available for 15 and 30-year fix. I believe a 20-year fix is coming out for this soon. This is only available on 1 to 4 unit property. You can have multiple loans but can only have 10 finance properties. So you can have home equity lines on a couple of those properties. It'll make no difference. You could have 25 loans on 9 finance properties and still be able to buy a 10th. Okay, you may purchase or refinance a primary residence regardless of the amount of finance properties you own. This rule only pertains to investment property financing. I just wanted to kind of put out there some other things that really set us apart, you guys. We do have the lowest rates in the industry. We have the ability to relock rates if the market improves by at least 0.25% throughout the process. I can discuss that more with you on a consultation call to do a pre-approval. We've got unparalleled service. I mean, I take calls in the evening. I take calls on weekends. Brett, the same thing. My underwriter, my processors, they work on the weekends when they need to during the busy times. So it's just huge service, I think, should be, obviously pricing is extremely important, but you guys, from my experience, especially when you're an investor, service is key. There's a lot of time and questions that just go into this, and I make sure that me and my team always give you our time. We are a direct lender, meaning that we control the loan process from beginning to end. Okay, all loans are processed, underwritten, and funded here at my office in San Clemente. You can come here and meet me in person to do a consultation to meet my team. I urge you to do that, or we can just work via email and via phone. At the beginning of the process, I always introduce you to my assistant, Jana. She kind of helps out with the documentation gathering, and then I am the point of contact in regards to rate, payment, issuing the pre-approval letter, and then guiding you throughout the steps of the process. And then lastly, you guys, Marshall Reddick is my biggest account. I built it over 12 years. I want you guys to tell your real estate advisor how amazing I am. I want you to refer me to your family and your friends. I have built my entire business off of referral. I don't buy leads. And I greatly appreciate it when anybody gives me a referral. I will take care of them like my family. I just recently opened up some additional profit here at my branch. We decided to take less than a 1% margin on investment loans now out of state. We were able to do some tweaking here to make it as appealing as possible for all of our investors, and I'm now going to be giving a full appraisal credit at closing for all Marshall Reddick buyers. That's an investment property loan on a $100,000 loan amount, okay? $650 is the average price to do an appraisal for a Fannie Mae loan because you've got to do the appraisal plus the rental comparable analysis, okay? I'm giving that to you guys at closing. You have to prepay for it, but when we close our transaction, it's coming back to you just as a thank you for all of the years of sending me your business and trusting in me. I greatly appreciate it. And that offer is only available through my branch here in AmeriFirst. This is my team. On the left there, you'll see Al Rodriguez. He's my business partner. He's a great guy. Brett Gillen there on the far right. My wife, Chelsea, on the left-hand side of Al. Jana Melissa is my assistant on the far left. Michelle Kramer is next to me. She's one of my loan officers. We're all down here. And then we've got my processor, Lee Tiska. We've got Joshua Varela. We've got Chris Barden, my doctor and my funder. Everybody here, like I said, is located in my branch here in San Clemente. We're in the old historic City Hall building, top of Del Mar Street. And that's all my information. I hope that you reach out to me. If you want to get started with a loan application tonight, you can go to www.reedhazard.com, click on the Apply Now tab, and then I'll follow up with you with next steps. Okay, thank you guys so much for all of your time, and I'll pass it on back on over to Patrick Perney.
Reed, thank you so much. Everyone, I know he went through a lot of information tonight, so again, if you have questions, go ahead and type them in and send them over our way. We'll address as many as we can when we wrap it up here at the end. And now we're going to move right along into private real estate lending. I'm going to hand it over to Patrick Prunty.
Hi, everybody. I'm so glad to be here with you tonight. Reed, I got to tell you, that's a tough presentation to follow, man. I appreciate all the good information. I also got to tell you guys that you owe it to yourselves to give Reed a shot at your loan. You know, I'm a big advocate of, practice what you preach, and I'm proud to say that the last conventional loan that I did, it was actually a refinance on a property I co-own with a good buddy of mine, Michael Wolf, down in McAllen, Texas. And Reed's office at AmeriFirst did it. They had the best rates and, of course, the best customer service. So, again, I just encourage you guys to give him the opportunity to do it. He knows our regional reps around the country. He knows the processes and systems, and he knows that because he's been here for so long. So, Reed, again, thanks very much.
Thank you, Pat.
Everybody okay? See my screen? Good. A little bit about myself on the screen here, and I'm happy to also say that I trump Reed by 1 year. So I'm very proud of the fact that I've been with the Marshall Reddick Real Estate for going on 13 years. Through that time, I've kind of seen everything, the ups, the downs, the changes in the financing, the changes in the markets around the country. And I wanted to jump on the call tonight a little bit to talk to those of you who perhaps are unable to qualify for conventional Fannie Mae, Freddie Mac financing. And there's a lot of reasons why that might be important. Not just because perhaps your credit score isn't good enough to do it, or you have a foreclosure or something of that nature. So whether you want to lend or borrow, I can help you with that. So when Reed can't or your bank can't do it, you should give us a call. And note real quick, this is only for investment property. Our lending does not cover any owner-occupied financing, unfortunately. Let's talk a little bit about the difference here. So when at all possible, you want to use conventional financing. Now, why is that? The rates are much, much lower. The down payment is much, much lower, right? So you only want to use private financing when necessary. Let me ask you a question. When would a borrower, and I get this all the time, need to use private financing? Well, those of you who are building large rental property portfolios may be familiar with this one, non-recourse loan. So those borrowers out there that desire to use their self-directed retirement accounts to purchase rental property, I can help you where Reed can't, because you need, as a self-directed retirement borrower, a non-recourse loan. And that simply means there's no recourse against the borrower, which is the IRA. There's also no recourse against the beneficiary of that IRA, that would be you individually. Second, as Reed was talking about, if you have 10 financed properties, you can't get a conventional loan, at least a Fannie Mae, Freddie Mac one. There may be some other options out there, but usually you're going to have to go private, right? And that's something where you can come to us and we can help you, for those of you out there desiring to build portfolios of 11, 12, 50, 100 rental properties. And third, for loan amounts less than $50,000. Generally, conventional lenders are going to kind of look down on loan amounts of $50,000 or less. There's simply not money in it for them, and so you're going to need to go private there. So if you guys understand, you might think, well, geez, a $50,000 loan amount, that's pretty low. But those of you who know, you buy property in Memphis, Indianapolis, Toledo, Ohio, and some of the other markets that we're in as the Marshall Riddick Real Estate Network, you know that it's very easy to find property that a loan amount of under $50,000 would help you make that acquisition. Now, these are buy and hold asset-based loans. So a lot of you are wondering, well, how do you qualify? Well, literally, we qualify the property, not the borrower. So we don't check credit. We don't look at your tax returns. Your down payment or the equity in a property that you own already is what is required. Okay? This will work for both purchase money loans, so those out there that want to make an acquisition who don't already own the property, or those of you who perhaps already own the property free and clear and are looking to encumber it and get some cash out to buy the next property. We have 3 loan programs available, very simply. A 15-year fixed that carries an interest rate of 7%. We have a 30-year amortization or 30-year payment that includes a balloon payment at either 5, 7, or 10 years. And that carries a rate of 7.5%. And we also have a 30-year fixed that carries the highest interest rate at 8.5%. Now, most borrowers are going to immediately want to go with the 30-year AM with the balloon payment. You know, it's going to give you the lowest payment as your payment's scheduled to be repaid over 30 years. That's a principal and interest payment. But note that you do have to do something at the balloon period. Again, that'll be either 5, 7, or 10 years. So all the borrowers that I talk to on a daily basis, I encourage them to look at the 30-year fixed. Certainly it carries the highest interest rate, but the peace of mind to not have to do anything at the 5, 7, or 10-year mark is what I would do as a borrower. And if you look at what actually the difference in payment is on a loan of this size, let's say 60, 70, 80,000, the payment difference between 7.5% and 8.5% is literally $50 or $60 a month. All 3 of our loan programs I just talked about have requirements. 40% down. Okay, so because this is an asset-based loan, know that you got to pony up a lot more money than one where it's not. And then you'd have to, have great credit and cash in the bank, etc. So again, 40% down minimum. That would be based on the appraisal. The subject property must cash flow. And for those of you who know us here well at the Marshall Riddick Group, we take maintenance and vacancy into that cash flow situation. Okay, so it's real cash flow. And you'll be able to find those numbers on our website. And I'm going to walk you through an example, or what I call a case study, here in a second so you can better understand. Additionally, we have a 3-year interest guarantee. Some people might call that a prepayment penalty. I call it an interest guarantee. And briefly, what that means is that when we set up this loan, whatever the payments are, the regularly scheduled monthly principal and interest payments, the cumulative amount of interest that you would pay over 3 years is that interest guarantee. So you effectively can't sell or refinance or in any way pay off this loan inside of 3 years without paying off the remaining balance left on that interest guarantee. And simply, that's a tool we use to prohibit those who desire to flip property with our excellent loan programs. They're unable to do that because, again, they have to hold these. These are buy and hold loans. Of course, we're going to require, just like any loan, any conventional loan, we're going to require escrow and title insurance. Of course, you're going to be required to maintain homeowner's insurance on the property. And of course, you have to have Marshall-Reddick approval. So we reserve the right here. If we just don't like the deal for whatever reason, we don't have to do it. Again, this is private asset-based lending. We're going to qualify the property, and generally we're comfortable lending in markets where we have a footprint. So where we know property managers and attorneys and property management companies, contractors, etc. Quick snapshot about what the payments and interest guarantees will actually look like. So I want to point to on the screen now across the bottom of the graph here, the payments, rates, APR, and interest guarantee are based on a loan amount of $60,000. So this would be like for a purchase, like a $100,000 purchase. Remember, 40% down. So for ease of numbers, 40% of 100,000, 40,000. Therefore, you have a loan amount of 60,000. And if you were to take that 15-year fixed, you'd be looking at a principal and interest payment of $539. You can follow the graph across to understand what your APR is going to look like and what your interest guarantee is going to look like. So again, I just wanted to kind of describe to those of you out there considering doing this, look at the difference in payment between the 30-year AM and the 30-year fixed. $420 to $461. So we're literally talking about $41 a month difference. You know, and everyone says, "Oh my gosh, it's a whole percent higher." Well, yeah, it is, and yeah, over the life of the loan, you're going to pay more in interest. But for $40 more a month, I'd have the peace of mind that I'm not going to have to do something when the balloon payment arrives. You never know what rates are going to look like at that time. You never know what property values are going to look like at that time. I'm a conservative borrower. All the loans that I have are all 30-year fixed. Common question I always get, I love to get it out right away, and it's, you know, how does Marshall-Reddick make money? Or what does Marshall-Reddick charge to do a private loan like this? Well, the fee to Marshall-Reddick is 3 points. 3 points, again, a point is a percent of the loan amount. So based on this, if we're looking at a $60,000 loan amount, you'd be looking at $1,800 fee to do the loan. Not too high. Okay, let's talk about a real case study real quick here because we have some good questions coming in and I want to get to those. This property in Oak Grove, Kentucky is under contract now from one of my borrowers who is a self-directed IRA. Okay, so he's going to be putting down the 40% on the purchase price of the $97,500 you see there at the top right. This pro forma is directly from our website, and anyone interested in this can run this analysis on any property you can find on our website. I've got a box here around the monthly income and the cash flow because I wanted to hammer home that the property has to cash flow. So a lot of people out there think, you know, my monthly income, which is just going to be my rent, take away my mortgage payment, my management fee, my taxes, my insurance. But as you know, here at Marshall-Reddick, we include that maintenance and vacancy factor. So whether your monthly income here may be over $200, your actual, real, legitimate cash flow is $85. So just note that in the event your property doesn't cash flow in a pro forma like this with 40% down, we would ask for additional down payment until the property does get into a cash flow situation. Quick snapshot of that same pro forma on the property in Oak Grove. This is what the amortization schedule would look like, right? You'd get this kind of document from me as you know, loan officer helping you get this set up. I want to point out again that the 3 points in this particular situation, because I'm an example guy, this borrower paying $97,500 for the property, borrowing $58,500, is going to be looking at a loan fee to Marshall Reddick of $1,755. That does not include, the escrow and the title insurance and any other fees like that. I also wanted to point out in the yellow box is that interest guarantee, which again is just the cumulative interest paid over the first 36 payments, which is 36 months. So we're looking at an interest guarantee of $14,745.88. Okay, getting started, it's real easy. You're going to want to talk to your real estate advisor, like Kristen Tabar, who's on the call tonight. She will get you started looking at markets and understanding, what you need, and if you're that particular borrower that needs this private financing. Then you're going to want to use our website to run the cash flow and return analysis. Ultimately, the process when you get in touch with me, when you're looking at property, is you're going to complete an application. It's not a 1003 like you're going to fill out for READ, but it's more of a non-recourse loan application. It's a little bit simpler. I'll then be able to look at your file and the type of property that you're looking to buy and have a good understanding of what that loan is going to look like, and I'll be able to provide you with a pre-approval letter so that you can start making offers. Now, I want to bring this full circle. When you guys come to us today for a loan to do this, where am I going to get the capital to provide that loan to you? Well, as I said earlier, I can help you if you want to lend. So those of you who out there have never considered it, you could become one of my Marshall Reddick lenders as well. So the borrower in the example I just gave you in Oak Grove, Kentucky, understand that I went to another individual who's got that self-directed retirement account or a lot of cash and savings and says, I'm looking for a great return. I don't like the stock market because it's so volatile, and my bank pays me literally nothing. So why don't I lend it with you secured against a property that the borrower is putting down 40% and I can earn 7, 7.5, or 8.5%. So I challenge you out there to think about the possibility of becoming a private lender. Using our website, guys, not a lot of people are familiar with how it works. So running down, when you are doing your analysis on your properties on our website, I've highlighted here the private financing tab. You're going to want to find that, which is always going to be on each property below the Reddick property rating scale. If you click that, you're then going to get the second box that I have highlighted to pop out. And then you can pick the loan program that you desire, whether it's the 7% 15-year fixed, the 7.5% 30-year AM with the 5, 7, or 10-year term, or the 30-year fixed at 8.5%. That, again, is going to recalculate all the numbers on our website to fit your particular scenario, to let you know what your return is going to look like and to make sure that you're in a cash flow position. So that's all I've got. I'm sure we'll have a lot of questions, and I'm happy to talk with you guys. We're going to kind of open up the floor for some questions. And, I really appreciate you guys being on the call tonight.
Patrick, thank you very much. Again, guys, if you have questions, feel free to type them in. We're going to present some of those questions now to both Reed and Patrick, and just let you guys know ahead of time, if we can't get to your question now, you will hear from me at some point tomorrow with an answer to your question. So don't fear. Reed, this one is actually for you. I'm going to jump off with, again, can you let the listeners know what states you guys cover at AmeriFirst?
Yes, we cover California, Arizona, Tennessee, Texas, soon to be Florida here in just about 2 weeks. And so I said Indiana, Tennessee, California, Arizona, and Texas, and then pretty soon here, yeah, we're going to have Florida.
All right,
awesome.
Perfect.
Reed, did you have a couple of other, you and I were chatting earlier. Do you have a question that you commonly
get?
Yeah,
absolutely. Yeah, I have actually a couple questions. One of them is, what are FHA loans? So any of you out there that want to know what an FHA loan is, Federal Housing Administration, this is for a borrower that has low credit, okay, had a short sale maybe within 2 or 3 years ago and can't qualify for a conventional loan, you would be able to get back into the market with a very, very low interest rate. FHA, the only difference from FHA to conventional is that FHA charges 1.75 points that is financed into your new loan. FHA does allow you, though, to go with as little as 3.5% down on a loan amount all the way up to $625,500 here in California. Any of you that are like first-time buyers too and don't have a whole lot of money saved, I would urge you to look at our 3 or 5% down conventional loan. We offer that with no mortgage insurance or with mortgage insurance, and those rates are going to be about the same as FHA. You just don't have to pay the FHA mortgage insurance, which is, again, financed into the new loan, and it's 1.75 points. So again, FHA loans, Google more. You can go to actually my website too. I've got a lot of information on there as well. The other thing is what are current jumbo rates for the jumbo market here in California. Just know that jumbo pricing is pretty close to being in line right now with Fannie Mae rates again. The jumbo lenders in the back-end market are really trying to lend here, especially in Orange County and LA County, and the pricing is the most aggressive that we've seen over the past about 2 years. Last thing was, how long do you need to hold a conventional loan? You need to hold a conventional loan with us for at least 6 payments, otherwise we have to buy back the loan. It would strip the deal of all commissions. There are generally no prepayment penalties, though, on a conventional 30-year fix. Some jumbo loans do require at least a 1 or 2 year prepay, and FHA loans have no prepayment penalty.
Awesome. I'll jump in real quick. Yes, those of you that are asking out there, if you'd like a copy of the PowerPoint tonight, we'd be more than happy. We're going to convert it to a PDF document, but we can email that. We also are recording the presentation, so that recording will be available, and you will get a copy of that in your email or where you can access it on the web. Additionally, I had a couple other good questions in here, one coming in on the private financing side. What's the minimum amount to be a lender? So note that this is not a syndication. We're not pooling multiple investors onto one. It would be one investor on one note. So that question really ranges on the market in which the property is located. But generally speaking, $30,000 is going to be the minimum. And really most of my loans are going to be in the $50,000 to $100,000 range. Also have some other good questions coming in about self-directed IRAs. I personally have a self-directed IRA, and I'm more than happy to walk you through the process, getting that set up. If you have, 401ks with prior employers or IRAs that are all over the place, and you're thinking about converting them into one in order to be a lender or be a borrower and buy real estate with us. Another quick question. We had someone asking about whether we're a turnkey investment company. We do offer some turnkey real estate investments, but we're more than anything, we're a residential real estate investment firm. We offer a different suite of investment options, whether it be buy and hold rental real estate, whether it be syndication investments, or whether it be private lending investments. So certainly if you're looking for turnkey, we can help you. However, if you're looking just to purchase property on the open market in other markets around the country or here in Orange County, we can certainly help you do that.
Great.
Patrick, here's another one for you to touch on real quickly. What is the return if we become a lender?
Great question. There is no arbitrage. So the interest rate is a straight pass-through, right? So as the lender, you jump on the note and the deed of trust or mortgage and all the other loan documents. I'm going to walk you through the entire process, and I'm going to handle all the correspondence with escrow, title, between you, between the borrower, between the real estate agents, the appraiser, the inspector, all of that. So the return passes 100% through. If you decide to lend on a 30-year fixed mortgage, you will earn that 8.5% every month. I like to call it mailbox money.
It is very, very powerful. I mean, I'm happy to say that. I mean, Pat, you can verify that I've been doing these with you as well with my own personal funds. It's really an amazing way to get a great cash on cash return. If you don't want to be buying real estate so much the more conventional way, it's really just fantastic.
Yeah, again, you always want to be able to use the conventional lending. It's going to be much cheaper for you, but a lot of people desire to go with this type of financing when they need to.
Yeah.
Thanks, Patrick. Just a quick follow-up to that one. What if the borrower cannot pay? What guarantee do we have as the lender?
Oh, good question. Personally for me, the chance that a borrower is going to default with 40% of their own money in the game on a property that cash flows is very low. However, in the event of catastrophe and default, I will have no problem foreclosing and taking that property along with their equity. So again, as the lender, the worst case scenario is that you could end up owning the property. And as long as you're comfortable owning that property for the amount you have lent against it, you got nothing to worry about.
Perfect. Thank you so much,
That's
Patrick.
a really good question. A question on the borrower side here. Those of you who may be non-resident, non-citizen investors, I get those all the time. I have individuals from Canada, Australia, all over the country. So the only requirement is going to be a American tax identification number. So as long as you've got like an entity, like an LLC that's got a federal ID number that files taxes in the States, and there's also where, non-residents can actually get a tax identification number. That's what's going to be needed. Again, the qualification for the private program is very simple, guys. If somebody's got 40% to put down on the property that cash flows, we are comfortable making that loan, generally as long as it's in our footprint, meaning in a market that we operate in that we're comfortable in.
All right, perfect, Patrick. Thank you very much. The rest of the questions, you guys, as I mentioned earlier, we're going to go ahead and get to those. If you have additional things that you want to address, my information is here. My phone number is 949-885-5162. I had someone say that my email address got cut off a little bit at the bottom, so that is ctabar, T-A-B-A-R, @marshallreddick.com. I'm happy to set up consultations with everybody who is interested in investing in real estate, investing in the mortgage, or becoming the lender. And if it's something that sounds like it's going to be your best option for you, I can connect you with Patrick. And on the other side, if you're looking to borrow and you're a conventional borrower, we'll hook up with Reed and get you guys pre-qualified and get you ready to start looking at property. If you're already working with the lender, it doesn't hurt to have a conversation with Reed and his team. You might find that their service and your overall experience will be better. And again, as we mentioned, they've been working with us for 12 years. We're comfortable with them, and we know that they'll get the job done. And again, thank you, everybody. My name is Kristen. I want to thank Reed for being on tonight and Patrick for being on tonight. And I hope everyone has a wonderful evening.
Thanks, everybody.
Thank you. Thank you.